Welcome back. The market right now is pretty stable. It's just buying some time ahead of the big events. Raamdeo Agrawal is joining us. He is chairman and co-founder of Motilal Oswal Financial Services. Raamdeo, hi, good afternoon. Thanks a lot for joining us. Raamdeo, before we discuss market, since I'm getting an opportunity for the first time to talk to you since that big news was announced, I wanted your thoughts on, HDFC and HDFC Bank merger, because financial services forms a large part of your portfolio. Yes. Your thoughts on how this news flow is going to impact the overall sector and your view on the news itself.
Yeah, so actually it's a big event of a scale change in the Indian banking. So where you straight go to 150, $160 billion bank, and what does it do to the competition in terms of what the benefit of scale? Banking is about a scale, and it gives a very different level of scale and consolidation in the product portfolio. So the execution machine of HDFC Bank now combined, what they are going to do in terms of leveraging the product portfolio and the customer base across India, and how they actually how do they actually capitalize on the scale in terms of liability, in terms of assets. And I would think that nothing great in terms of it was expected, and it should have been done maybe earlier. But short term, maybe a year or so might be a little bit flattish kind of thing. But longer run, I think it's clearly a beneficial thing, and it will be accretive in every aspect of it. I mean, value accretive. That's what I would say.
Raamdeo, hi, good afternoon. Prashant here. The last time we spoke with you, you were obviously, like everyone, very cautious about what this very large rise in commodity prices will do to corporate margins, profitability, especially in some sectors. Now we have the policymakers also sitting up and taking note. The RBI policy, we have another data point, inflation numbers yesterday. What is your view now? Because the mad rise we saw perhaps has halted a little bit, but prices are stabilizing at very high levels, commodities that is. Your sense?
Yeah, so I was looking at our earnings estimate for this quarter. I think barring one or two sectors, everywhere there is a decline in the margin, though the earnings growth is more like 23-24% for the entire Nifty, but the margins are declining in every sector. I think Q1, which will be June quarter, the loss of margin will be more intense and much more widespread. That's what my sense is. But how much of that they'll pass on, so the top line growth will also be there with a lower margin. How the aggregate profits they will shape up for the Q1 June quarter, that only time will tell. But clearly the commodity prices are hurting the margins of the corporate world.
Hi, Mr. Agrawal. Nigel on this side. There's a debate out there with regard to the new age themes. Some believe that post that correction there is value. I was looking at a couple of the portfolios that maybe you oversee as well. The Nykaa is finding a bit of a mention. You have Zomato as well. That's in their smaller parts. But what's your view on some of these themes? New age themes. Do you believe that post that recent correction, some of them deserve a closer look?
Closer look to maybe increase your position. And second is that internet is one of the most non-linear development for the expansion of the company, the sales, the profit, and everything. So it's a very non-linear mode of business. Now, how the business are built on them, and how they will be able to use to their benefit the power of internet. That needs to be seen, and these are early days in India. I mean, we are just about 4-5 years old in terms of digital economy, and you are seeing the early version of these businesses. There will be high mortality rates. I mean, out of say 100 companies, maybe 70-80 might just get wiped out. But the best thing about this category, the digital businesses, in every category, you have only 2 or 3 companies left very quickly, not after 20-30 years. But in 2, 3, 4 years time, you see only 2 or 3 leader companies are left, and that category is finished. So in everywhere, wherever this categories are large, whether it is delivery or fashion or beauty or gifting, whatever categories are there, you'll get to see 2 or 3 very large companies emerging. So that's the kind of a story, very consolidated story of a very large growing opportunity. So I would think that good thing is that now the markets have learned that valuations, that hype valuation which was there, I would say 50-60% of that is busted completely. And that is a good thing to happen. So all the new companies which will come, they will come at sensible prices. And even in the private market, I think there would have been a good correction for this company. So I think some sensibility will come, and then this growth will overtake the valuation, and on the merits, the companies will start getting valued in the marketplace. But I don't think it is a sector which is written off or anything like that. In next 5 years, 7 years, you'll get to see very, very large, like 5 lakh, 7 lakh crore, 10 lakh crore companies coming out of this segment.
You know, Raamdeo, I remember the last time you were here as guest editor, the market was in a bit of a disarray. I think you were in the middle of March and you had stuck your neck out, said that the market is very close to bottom, and the FIs, they've exited, or they're exiting in part, but they'll have to re-enter, and that re-entry will be very painful. We saw some of that play out, and also you used to say that in market you just want to see how far is the downside, because upside is unlimited. So do you get a sense that the market, the correction is over, the worst of the downside is over, or do you think there could be second round of selling?
No, I think you need a new event. I mean, in the name of war, you cannot push it down significantly. In the sense that if there's a completely new risk factor coming in, I don't know from where it will come. And that's the beauty of the risk. So there is always a possibility that some new factor can come. I thought after COVID, no new factors are going to come for at least few years. But before the COVID just about ended, and you got this Ukraine war. So I think the market nobody knows what is the frequency of these kind of events. So we live really in an uncertain world. So if there is no new event, I think we have seen the worst of the selling.
Raamdeo, just to come back to the point about margins, and so earnings expectations have not changed, right?
Yeah.
Overall for FY23, even though there is margin compression. But you made this point once that for commodity companies, right, steel companies, which are generating a ton of cash because of high prices, market is unwilling to assign high multiples because there is doubt whether they'll be sustainable or not.
Yeah, Prashant, actually, I was looking at the numbers of the metal companies, and in my aggregate, it is just about 9-10%. I'm very surprised, because it's getting very mixed in terms of metal companies' performances, because they are the converters basically. So they buy raw material and they sell finished product. So even if finished product has gone up in terms of the prices, I think raw material prices have gone up even more, and including the logistic cost, I think the conversion margin is under pressure. That's what the earnings estimates are showing. So clearly, we don't know whether they really have the boom in profits as the boom in the prices they have. I think these two are different things right now. That's the sense I'm getting from the estimates.
Raamdeo, in the past, I think you have been talking about focus investing rather than going, very diverse. Stick to that right now. Take a larger bet in a few large names rather than spread yourself across, quite a few names.
Yeah, if it is private money, then I fully stick to that. I mean, in the sense that if it is not a public money, your own money, you're not benchmarked to the any index, then obviously that's the best way to go. Buy as many companies, you understand, 5, 7, 10, 15 companies, and go whole hog in that. But when you're looking at your performance vis-a-vis a benchmark, then I would say that I think safer strategy would be to be a little more diversified. Maybe not 15 companies, but 25, 30, maybe even 35 companies, and spread out your bets so that you have a better chance of even performance in say 12 months or 2 years or 3 years kind of thing.
Raamdeo, your thoughts on the IT services space, because generally they've performed very well, and now for whatever reason, maybe because fears of a slowdown in the end market, big end market, which is the US, intrinsic valuations being high, this quarter there is seasonality as well. I mean, every once in a while you start to get a little doubtful. How would you approach names in the space, and which particular segment in the IT services space do you like?
So IT is I think IT is the segment which has the highest competitive advantage for India among the businesses, highest, and it has longevity, it has a scale, it has a cash flow, everything is there. There is hardly any tech company which is not profit making, and decent profit, I would say. This is a segment, and it is on the roll. I mean, you've seen TCS, they have recorded net more than 1 lakh people, and there are other companies, they have also recruited more than 1 lakh. So I think we are looking at more like closer to 1 million, maybe 7-8 lakh new recruitments only coming for the tech, for the services company. And then the captives or the corporates, they will recruit for the same segment even more. So I think there's a tech boom on, and there's actually no competition from any other country for this space. And actually I don't know how this will shape up, but what I'm hearing in terms of people with 3, 4, 5 years experience or some specialty in some technology, they are being given some humongous increases like 50%, 100% kind of increase. And I also hear that some of these talents are being recruited directly by American and European companies into India. So I think a lot is going to happen. I think the world has to pay, the corporates have to pay a lot more eventually for their services, even if it is coming from India. Because if the raw material price, which is 50-60% of the total services cost, if that is shooting up, somebody has to pay, and that is going to be their clients. So I think it's a very interesting time when work from anywhere and this demand for digital technology has come up in a big way, and how the cost management happens at a company level and at a client level. That I think in the discourse for the post-con call in Infosys, TCS, and other companies, I think it will come up, and we'll talk to them and understand how this thing is going to shape up.
Usually you hear the financial services sector sort of poaching people from all other fields. Now it's the IT sector. I mean, I've heard more than a few instances of people in finance moving to the IT side, not to do finance, by the way. So that's, I mean, absolutely take your point there.
You know, Prashant, I'm sure you have it on your mind as well. My little boy starts school on Monday itself, but we had that crystal ball. Now, which sector is going to do well? Just push him in that sector. The kind of mad rush we're seeing for talent in the IT space. But Raamdeo, you know, it's become increasingly difficult even for fund managers to go ahead and generate alpha, you know, in this sort of a scenario where the benchmarks itself are running up. In that sort of a scenario, you know, it becomes very important to maybe get back to that, you know, the old saying, which is the next Kotak Mahindra Bank, which one is going to generate that? You know, we've heard it in the past about RBL Bank, maybe Yes Bank. You guys as well have been quite positive on AU Small Finance Bank. According to you, which is the next big bank?
Yeah, so next big bank has to be a successful bank of a smaller size. And as you said yourself, AU and all, we have taken a position thinking that they will be successful and they'll become very large. But the scaling up in this business, of the lending per se is very skilled business, I would say. I mean, you need a skill, and that skill is inherent in the risk management of the bank. And that skill doesn't come that easily. So there are very few banks worldwide also who have been very successful for decades and maybe even centuries to demonstrate and build book of a very large size. So India has that opportunity. When India goes from 3 trillion to say 6 trillion in next 10 years also, you need to underwrite almost 200 lakh or 250 lakh crores of additional credit. So where are those bankers who are going to underwrite? It's not about the competition. It is about the competence, that who has the competence to underwrite well and underwrite in a scale. So that's why this HDFC merger and all, I mean, they are the guys who are going to underwrite very large tickets without much competition in the days to come, because they have the balance sheet and they have the wherewithal and they have the skill. So that's the opportunity in India. So anybody like any smaller bank which has come up and they have built, say, AU or any other bank who are showing their competence in underwriting and scaling, we'll see whether they can scale up at a say 25-30% in the years to come. Opportunity size is very, very large. And the only way for me to figure out whether they're going to do well or not in the future is going by what they have done in the last 3-4 years, and particularly in the COVID period.
Right. Just very briefly, are you bullish on manufacturing as a theme, Raamdeo? I mean, the PLI linked, there are opportunities. We've discussed some of these names in the past. Textiles, for example, again, coming back on the radar. Anything there?
See, because of this entire turmoil, I would tilt my portfolio more towards services than manufacturing. But say automotive is a very large segment where companies have concrete advantage and they have captive customers and like duopoly kind of situation in every segment. So of course, manufacturing coming from these kind of segments are going to do well. But broadly, seeing the kind of inflationary situation, raw material prices here and there, logistic challenges, I think manufacturing per se, I'm just giving a broad this thing. I think profits on that side, of course, it will come off and on, but the predictability and the smoothness of the profits coming from manufacturing companies could be challenging. Sometimes it will be very high, sometimes it will be very low. And that is not good for the valuation in the market.
Okay, all right, Mr. Agrawal, always good speaking to you. Thanks so much for stopping by and giving us your view on markets as well as sectors. Well, that backdrop in your office looking pretty good. Hoping to come across and meet you someday out there. But for the time being, wishing you a good weekend ahead. Well, getting back to the markets then, a bit of a slippy slide is what we have seen from the high point of the day. The market suddenly went a little bit lower. The mid-cap index as well, that was doing a relative outperformance. Suddenly we saw a bit of a slip out there. Dr. Reddy's, that stock moves to the low point of the day. HCL Tech as well is slipping a little bit. In fact, that slipped quite a bit, moving lower as we speak. But ITC was the one that breached that 270 rupee odd mark when we were having that chat with Mr. Agrawal. For the time being, we'll slip into a short break. But up next, we'll get you a couple of trading calls as well with our technical experts. You stay with us. We'll also track key expectations ahead for Q4 numbers coming in from Infosys and HDFC Bank. Remember, both those two will react on Monday.